Hi, and welcome back to the Food Fund, where we explore all things related to investing in food and beverage stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in great companies. If you love food and love stocks, you will definitely love this channel. In this video we will be exploring the bankruptcy of Tattooed Chef. We will do a deep dive on what happened and what we can expect to happen next. Be sure to watch through the end of the video where I share my final thoughts on this. Before we get started, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, cue the logo. Well, it has finally happened. Tattooed Chef is officially bankrupt. Let's start at the beginning to get a better understanding of what happened. For those who may not know, Tattooed Chef is a plant-based food company that was founded in 2018. They were known for their vegetarian and vegan frozen meals, bowls, and pizzas. After going public in 2020, the share price initially rose quickly. However, trouble was brewing beneath the surface and the share price would soon begin to fall, and keep falling. The share price fell from an all-time high of $28 to its low of 25 cents. A recent Yahoo Finance News article tells us that Tattooed Chef is planning to file for Chapter 11 bankruptcy protection and liquidate its assets in an attempt to restructure. Notably, the company expects to continue operations during the Chapter 11 process, including, but not limited to, paying employees and continuing existing benefits programs, meeting commitments to customers and fulfilling go-forward obligations, including key vendor payments. Additionally, it is noted that CEO and Chairman Sam Galletti gave the company $12 million in unsecured loans. We will come back to this key issue later. There were several vital catalysts for the company's downfall, most notably not making money. In reviewing the Q3 2022 earnings report, it became clear that Tattooed Chef was on course to run out of money by the end of 2022. It was later revealed that Sam Galletti loaned the company $5 million to keep it afloat. During this time, a Bloomberg Law article mentioned that Galletti made an $8 million stock sale during the period. Tattooed Chef then delayed or missed reporting of their quarterly earnings in breach of the stock exchange trading requirements. Adding to troubles, a class action lawsuit alleged that throughout the class period, defendants made false and/or misleading statements and/or failed to disclose that. A lot of badness going on at that company. So let's look at the fundamentals briefly, because I am not investing in this company for sure. Revenue actually grew at a CAGR of 35%. This is actually good and makes it all the more tragic. Next, the gross margin fell because Tattooed Chef was spending more on making its products than the products were selling for. And, as we can see, once gross margin starts to fall, it falls really far down. And, as I always say, nothing good ever happened with negative gross margins. When we look at free cash flow, cash on hand, and total debt for the company, it becomes super clear that they were spending themselves into oblivion. In 2020, when they IPO'd, they had $132 million in cash, were burning just $20 million per year, and had only $2 million in debt. At that rate, they could have lasted 6 years before they went bankrupt. In 2021, they burned $68 million, more than tripling their 2020 burn rate, but had only $92 million in cash with $15 million in debt. 2022 was even worse, with $116 million burned, with only $6 million in cash left, and the debt ballooned to $55 million. At this point, the company was burning so much money that they could not afford to run the company and pay their debts. Most recently, Tattooed Chef was on track to burn $87 million, had $58 million in debt, with only $4 million in cash left. But the worst thing about all of this was that investors were clueless as to how bad the fundamentals were, because Tattooed Chef failed to file its quarter reports on time. So as you can see, there is a reason the share price fell off a cliff and the company is now bankrupt. So what happens now and what can we learn from this? Before sharing my final thoughts on that, please subscribe, like, and share this video. Your support means a lot to the Food Fund and your continued viewership is a huge help to grow the channel. Now, let's get into my final thoughts. With a Chapter 11 bankruptcy filing, The owners are attempting to restructure the debts and continue operating the business. This is not always successful and Tattooed Chef may still end up going out of business. The most painful thing to equity investors is that their shares most likely become worthless either way because common shareholders sit at the bottom of the capital structure. As you can see, Tattooed Chef would have to enter an agreement to first pay back its senior debt holders, mezzanine debt holders, preferred equity, and last the common shareholders. If you hold Tattooed Chef stock, you are never getting your money back. While doing research for this video, it became clear that there were some strong parallels between Tattooed Chef and another failed food company. Very Good Food Company was a maker of plant-based meat alternatives that grew massively from its humble beginnings as a crowd-funded operation. They too got into massive debt, defaulted on their loan, were in non-compliance with Nasdaq listing regulations, and had multiple board members left the company. Based on these two cases, we can find some consistent signs of impending doom. Looking at a trailing 12-month graph, we see that though revenue initially grows, it is outpaced by free cash flow burn. This requires the company to draw on its cash reserves and take on debt. Revenue decreases, free cash flow burn worsens, cash reserves are depleted, and the company is left with at least twice as much debt as cash. During this time, some shady loans between the CEO and the company occur and they double down on some huge expansion plan. The share price falls 98% and the company becomes a penny stock. To wrap it all up, beware of CEOs promising innovation, making shady deals with their company, and doubling down on expansion plans when sales are falling and debt is rising. Many thanks for watching. What do you think about Tattooed Chef and its demise? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.